Okay, so today this is going to be a very important session because most of the people, what do they want? Even again, see, we have just few are online right now, so it's all right. I will provide the recording as well. But then, most are interested in the setups and the signals. They do not want to learn actually. They jump from groups to group and it's very easy to manipulate. What we have to understand is I can just open a signal group, and on one group I'll give buy signal, on other group I'm going to give sell signal. One of you is going to be right every day, it's a day on every setup. And what are we going to learn by following signals? We will never be financially free. We will never achieve our freedom if we keep on following signals. So again, I am sure that you have your own setups, whichever way it is, whichever style it is. But we're gonna dive a little deeper on smart money concept. And again, in smart money also, there's a lot of ways like ICT. He uses a completely different style of trading than the one that I do. So all those that change of character and optimal trade entry, all those he uses Fibonacci and all that, which is good. So, but then the one that I'm doing is again completely different. This is kind of a more, we can say a shortcut for trading journey. So we will be first, the most important thing that we focus on is the structure. The moment we understand structure, you can literally predict the market where it is going. 4 months ago, I predicted DXY and Euro USD where they were going. And then a few months ago, I gave about that the USD JPY as well. So swing becomes very easy when you understand the structure. That I'm going to show you with the graph itself. And when you understand the structure, then you want to find your supply and demand zones. So then we wait for price to come to those certain area of interest, and then we involved with confirmation. So today I want to talk about Wyckoff as well. There are certain few other confirmation that I use. That is one of the two double MB boxes that I use. So we are gonna talk about only Wyckoff today. So we'll go a little bit into Wyckoff and structure and SND. So after we complete this, I know we are not going to be able to go into detail because learn all of this, but after this session, you will have a new perspective on where to involve and how to involve. So that's one good thing about this session. We will know when to involve, when not to. So So let's take Euro USD for example. Let me use a different one, Wanda. Right. So let's start with the structure. We'll do a top-down analysis on this. This is what we have on Euro USD. This chart is not complete actually on Kwanda. So FX, this one gives you a better chart. But for this, let's just use this. Where is this heading right now? Euro break of this structure, hence printing bullish. And now when price came back, it was supposed to go higher and take out this high. What is that? That is Dow Jones theory. What he says is once price moves, breaking a high, then when it comes back to certain demand zones, and then After the retrace is done, the next move is expected to make a higher high, break this high. So higher high, higher low, higher high, higher low, higher high, higher low. This is what Dow Jones theory implies. Until and unless there is a change of character, there is a shift of structure, and then we can assume bearishness again. So here we had a clear break of structure right here with this move. This move failed to make above this, hence following that Dow Jones theory, and we have been bearish ever since. Look at this move. Now we can argue that we had a break of structure like this, and this is where understanding our supply and demand zones is very important, because few people, they have gone through mitigation, they have gone through imbalances, order blocks, some SMC terms, and then they think that they can just trade anywhere, and and that is what you are going to give uh, a lot of false hope from SMC, because structurally we are all. Give me a moment. So structurally, what we are doing is we are already printing various movement into this market, already turning various. Now it is even possible that this is going to target all the way here. Let me check out the other chart. We don't have enough information here. Oops. Yeah, this one. Okay, so this was missing on Aquanda. So now this was already printing the movement. So we could have expected that, yes, this move could have targeted here, right here. Where is that? Where is this break of structure coming from? From right here, somewhere right here. Price could have targeted this, but you have to understand the fact that price already mitigated. Price has already mitigated this supply zone. This is when you have to start seeing as in a form of a multi-time frame analysis. This whole structure right from here, from this low to this high, is a zone, which is a supply zone. So we should not be surprised that price is already reversing from here. And people are still stuck in their mindset that price has to go here. Price has to mitigate this. Price has to fulfill this imbalances all here. And that's where most of people are wrong, and they end up on the wrong trade. So because this is a bearish market, because this is printing bearish already, we should rather look for sales rather than buying into this, hoping that price will come here and then we'll look for sales. So this is what I'm talking about, structures. This is a monthly chart. When you engage yourself on a 5-minute, 15-minute, 30-minute, the same thing you're going to see. Yes, if price do come here, I would be very interested to sell this. Even then, if it doesn't, it's all right. We have already reached the zone. Already mitigation is done, even twice. And we're not interested in a zone where there are multiple mitigations. So now price has already broke the structure again right here. Price has already broke the structure, and where it is heading to our first demand zone. This is where it is going to target. First demand zone, and possibly even lower. So we still have ways to go. That's why I was very bearish on Euro USD. I think around from here in this last month, I've been very bearish on Euro USD and all other USD pairs. So this is a brief idea about structures. We have a shift of a break of structure right here. So what we are expecting, we're expecting a buy either from here or from here. So first, what do? We try to read the structures. Before we place any trade, look at the structure, what it is giving you. What is the institution telling you? What are their footprints that we have to check, that we have to understand? So we have this break of structure. price is coming back to the zones. Now, second part, as I have mentioned here, okay. Structure, number one, what we have to look before we place any trade. Next, supply and demand zones. So where is this price going to the next demand zone, and where is that zone? So next important thing after you figure out what the structure wants, that is the supply and demand zones. In this case, we're looking for a buy. Before placing your trade, before you start your day, you already should have a bias. You should know what you want to do. If you are bearish or if you are bullish on the market, that you should already be decided before you go into the market. So now we are expecting kind of a reversal from somewhere here. It can be anywhere from here because price has already tapped into this high right here. Price has already tapped into this high already. So price can easily reverse from here. I'll go into a smaller time frame just for the sake of understanding. Bear with me with this. And then just because price hit our supply zones or demand zones, we cannot just buy and sell. We need to look for confirmations. And I guarantee you there is going to be a days of manipulation before this market reverses, because this is a monthly chart. There are huge orders that the institutions need to uh, mitigate, or there should be a transfer of powers, that is, from the weak hands to the strong hands. What do I mean by that? That means the weak hand means you and me, early buyers. So there will be people buying, institution will help them buy, and then they will take it out. There will be buying, institution will again take it out. They will even fake break of structure. Again, they will take it out. Until and unless we see the spring on the Wyckoff taking out all of these lows right here with an impulse, that's when we know that this could be the spring, the final that the institution are bringing down. And how are you going to know that? The next move has to break all of this high like this. This happens on the retrace. We can already involve ourselves again with a confirmation. That's when we can invoke ourselves for a buy. So this applies, this structure, this demand, this Wyckoff applies on every time frame. If I didn't show you the time frame of this, you won't be able to guess. You won't know whether this is a monthly chart, a daily chart, 15-minute chart. You won't know if I don't show the time frame. So that means wherever it is, we can see the structure, we can see the supply and demand zones, and with the confirmation of Wyckoff, you can involve yourself. That is why I involve on a 15 seconds and 10 seconds chart. People used to tell me before I do that, they used to tell me it is impossible to trade on a 1-minute chart. And then when you understand the workings, when you understand the algorithms behind what the institutions are doing, that the time is fractal. Whatever happens on a higher time frame, the same thing will happen on a small time frame. When you understand their movement, each and every movement, you do not need all of those that we consider for, a trend line and all that, the candlestick patterns and all that. Because yeah, there are people who trade with those, and that's fine. If that gives you profit, that's good. But what if you do not need all of those things? You do not need to learn all of those things, and still you can be a profitable, and still you can even do better. Why not learn it? Why not go for it? Because a lot of people say that the smart money traders, they think they are the best, and they talk shit about other styles of trading. No, it's not like that. Those people who really don't understand, who just have a little bit of knowledge, they brag about those things. Okay, any form of style, it's fine. But one thing I can guarantee you, DRR, risk reward, you're not going to get anywhere in any form of styles then smart money. When you understand this, and even in smart money, you need to have Wyckoff in it. Only then you will get a good RR. This I challenge anybody. You find the best trader in the world, and maybe he earns 500 pips, 1,000 pips on daily basis. I don't care. Let's compare the RR, and we'll see. So when you trade more and more, when you earn more and more experience, when you understand the workings inside, when you understand the structures deeply, then you will start to like RR. You will tend to shift your focus slowly rather than pips. You want a smaller stop loss. You want a smaller target, but it's to give you more profit because let's say that 50 pips stop loss one lot, that's going to be about $500 risk. If you can involve the same trade with one pip, you're risking $10. That means you can go in for 5 lot. So when you think like that, then in terms of RR, this is better. But whichever gives you profit, whichever styles that suits you, that is the one that you choose. That is the one that you should be choosing. For me, this is what I'm comfortable with. That's why I'm into this. If you are a channel breakout trader and you have your way, if you follow Fibonacci and all that, that's good. Stick to it, but it does not hurt you to learn and know other stuff. It can work magic. It can be a great confluence when you understand each and everything. If you are newbie, do not try to confuse yourself with all forms of styles and tradings. Just focus on one that gives you profit. And as you go with more experience, then try to grasp more and more styles of trading. So first things first, then is sometimes why we are so caught up with structures. We think that we have a break of structures. We think that price should come back to mitigate, to fill the imbalance to the order block like this. And especially when price move with such a huge impulse like this, let's say the RSI and stochastic, all the indicators are giving overbought. That's when we think that price should really come to the demand zone, and without even any confirmation or without any supply zone, we start to force sales. And price do come like this little bit. And what it does, price do come like this. And instead of going lower, it does this. I'm sure you have faced this. I'm sure you have lost a lot of money in a situation like this. But what you need to understand for structures is it can move any way it wants, like this, or even breaking and then even going higher, or this, like this, or it can peacefully go like this, higher high, higher low, higher high, higher low. And what it does in the same time, making a channel. And people start buying here, 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 here. If it is a bullish trend, they start buying here, here. And then the moment this break, people starts to sell. Or they wait for a retrace to this trend line and then they sell. And sometimes it works and sometimes it doesn't. And then price go higher. Sometimes it goes lower. But what I want you to know is when you understand structure, you should not be buying and selling because of a trend line. You should not be selling here because it is a breakout and a retrace. Rather, involve yourself with the understanding why it is falling, or if it doesn't fall and it goes higher, why? What happened? There must have been an accumulation here. So we'll talk about a little bit of Wyckoff before we go for tomorrow's lookout. So let me just open this page for you. So Richard D. Wyckoff, he is the one that we are now studying. So this you can go by yourself. This is the website. If you want, I will share this on the group again, which I did already. So there's a lot you can go through, like a five-step approach to the market. This is very good for, especially for stocks. Okay, and it applies to everywhere. Stocks, cryptos, index, everywhere you're going to see Wyckoff. So this is what we're talking about. Wyckoff Composite Man. What it says is the market, this market, the retail traders like you and me who have less money, maybe you have a let's say a $500, $10, $50, or even $1 million account. But even if you go all in right here, it's not going to move. This is not going to move. The institutions, they alone have the ability to move market like this. This fall right here, this buy right here, we cannot do. We're just following the institutions. They have billions and billions of dollars. So who are these institutions? So these institutions can be big corporal banks, companies, hedge funds, and then bonds. All of this combined collectively, we call them as a composite man. So composite man is nothing but a single entity that controls the market. That's how we look at Wyckoff's Composite Man. So the price cycle of Wyckoff Composite Man, why most of my trades, whenever I enter, price tends to, well, if I'm buying, price tends to go up. And if I'm selling, price tends to go down. And I engage with such a small stop loss. If it hits, I let it hit. Why? Because of this chart right here. What the price does is when price is oversold, right? When the price is oversold, it goes through a process called accumulation. And that happens when demand is greater than supply. When accumulation is completed, and within that accumulation, which we're going to come later, within that accumulation, the transfer of powers happens from weak hands to the strong hands, from early buyers, take out, again buys, taken out, lots of manipulation. After this accumulation is completed, there is a process called markup. So this is where I try to involve myself most of the time. I wait for that accumulation to be over and I involve so that I want to be in this. I do not need to wait for it. So that's why most of the time it runs. And when it doesn't run, that's when I'm a little bit reluctant on that particular trade, because if the institutions have done the accumulation, they are supposed to go for markup. And if it's not going, that is why I always say, if you set a stop loss and price is coming back to either break even or stop loss, why do you need to extend your stop loss just because your ATR indicator is or value one or two value is not met, or your 50 pips or your preset 30 pips, 20 pips stop loss is not met? Why? The setup, the buy setup you were looking for is already invalidated. That means the institutions do not want to protect. Look at this. Let's say this is the accumulation right here. And instead of price marking up like this, going up like this, price comes back here like this and hit your stop loss somewhere here, like this. So what you need to understand right here is they are not ready. This demand zone right here, it is supposed to be a protected demand zone. That means the institutions have orders here, they have buys here that they want to protect. And if they are not protecting their demand zone, if they're not protecting their orders, then maybe this was a manipulation. Maybe they want to take this price lower. So when you think about that, instead, you could have lost that trade with 5 pips, and now because you had a preset idea of 50 pips and 40 pips and 30 pips, whichever it is, you are going to lose that amount if this is what they indeed want to do. And now that is literally you are gambling those pips, 30, 40 pips. You are gambling in the hopes that price may come up. And those people who have lots and lots of money in their account, they may engage here with a very small lot, right? And then as price comes down, they use the martingale theory, and they keep on increasing their lot. And when price comes up, they are in profit. Yes, that is also a thing. If you have enough money in your account, and if you involve yourself with a very tight risk management, then maybe you may be profitable that way. But lots of the retail traders, especially new ones, they do not understand. They have a $50 account, $100 account, start selling at 0.5, martingale 0.10, 15, and price moves few pips and blown their account just like that. So I face these things, and that is why I wanted to put this out, because I will be publishing this video, and I think this will help people understand why their stop losses need to be checked. So when price markup is done, when prices reach an area of overbought zone, that's where distribution happens. And that happens when supply is greater than demand. So after the distribution is completed, price mark down again. So this is what happens over again and again on a chart. If you check everywhere, let me go to a smaller time frame. I'll show you what happens all the time. Accumulation, distribution, markdown, accumulation, markup, distribution, markdown, accumulation, markup, accumulation, markup, accumulation, distribution, markdown, distribution, markdown. Now, this may be an accumulation or distribution. We don't know yet. And price may come up or price may go down. We don't know. But everywhere, you're going to see Wyckoff accumulation and distribution. And if you start trading according to that, then you're going to lose money. That is why I say structure, find supply and demand zone. Within that supply and demand zone, we look for that accumulation or distribution, and then we involve. So what do we have in accumulation in Wyckoff? So this is what, I'm not going to explain these things. I will draw my own chart right now. I will simplify this for you because this is a little bit difficult to understand, but I'm not going to explain these things. You need to study this for yourself. PS, SC, AR, and all this. So this is basically what PS is. When price is coming down and hitting certain demand zone, that means price is expected to go accumulation when order starts to accumulate. So before that happens, we reach an area, a point where we call it a preliminary support. That means a kind of a primary support. And after that support, that will be taken out with selling climax. That means price has reached the climax of that sale. That means it has reached the bottom. And now that will be automatically followed by this AR, that is automatic rally. After selling climax is done, it is usually followed by AR. So these two, from this low to this high, developed our trading range. I want to explain this. I will draw this. Listen to me for now. So this leg right here, this high to low, this line and this line, this becomes our trading range. That means this is where we expect price to manipulate up and down, or kind of a support and resistance area, let's call that. And that's where we expect certain manipulations to go through. And those manipulations are what we are termed here. So after this AR is done, the next retracement is called ST, secondary test. This test is testing this low. This low may break this SC or may not break, but it is coming back to test this. And then we may have another price going up. It doesn't necessarily need to break this high. It can be lower. We have this, and then we will have price moving down, breaking this lows. If you can see, you can draw a trend line from here to here. So this move has to liquidate this lows right here, and that is when price go into this. All happened in phase A, and that's when we go into phase B. That's when secondary test in phase B happens. Again, Then we have spring. This spring needs to break this STB low. And that's when we know the spring has happened. And then all this, I'll explain, okay? Let's go to a chart. I know this must be a little bit confusing. Look at this. Let's say that price came up like this. We have a break of structure and now price is coming up. Now price is coming back to this zone right here. Let's say this is the demand zone. But what happened is when price is coming back, we want to see something like this. Maybe this is the PS, preliminary support, and price came back, selling climb. Maybe price came back to selling climax, automatic rally. I will write this down, okay? ST, STB, spring, break, test, and then move up. So I'll write this down for you. Let's say price is in a bullish momentum, break structure right here. Now price is coming back to this demand zone, and this is what we want to see. So this may be, let's say, our PS. Let's call this our preliminary supply. Let's call this our selling climax. Let's say that price has reached our selling climax right here. And then what do we have after selling climax? An automatic rally, AR, right here. After AR, what we're going to have? Secondary test, ST, remember? ST. So you need to go through and read that website about all of this, okay? So now, once we have selling climax and AR, you can draw out two lines like this. So this range becomes our trading range. That means we are going to see a quite lot of manipulation of this support or resistance that you can call whatever it is. So now price after secondary test, this move can either break this high or it may be like this also. It does not matter, okay? So if it does break, you can name this or you do not need to name this. It's fine. Okay, so these things happen in phase A. Now we move into phase B. You need to watch this again, okay, guys? I will provide a recording. It can be a little bit confusing at times. Okay, so this happened in phase A. Okay, let me just write that down as well. This is phase A, and now we are going into phase B. So let's name this B. Price came back and broke this lows. This low can be here as well. It can go even lower than this as well, or it can make equal low as well. It does not matter. What you need to understand is you have your PS, SC, AR, ST, and this move that break this two is what we call STB. That means secondary test in phase B. That's why, hence the name B, STB. So now you are not only gonna see just three moves like this, as shown in this picture. There can be many moves like this. Okay, it does not matter. What matters is where you get those points. After STB, the next move has to liquidate all of this, and that's where we call spring. That means spring is so this spring is usually what we also refer as a sec out. Okay, we call it as a sec out. That means all of this loss needs to be liquidated with the spring. So how do we know that this is the spring in the market? Maybe you will have different STBs, more than one STBs, more than one spring. But how do we know that this is indeed the lowest point that price is hitting in that particular demand zone? This move, after the spring, this move needs to liquidate all of this. And that's when we get our first sign of strength. We're starting to see the strength in the market. We're starting to see sign of strength. And after sign of strength, usually there will be a test of this spring. They will usually come back to test that spring. After this test, we may have another sign of strength, and maybe this is the LPS. So what are these things? LPS and springs and all that. It's all here, okay? Springs or checkouts, tests, sign of strength, last point of support, backup. All this you will find in this website. You need to go through this, okay? I can't go much deeper into this because it's going to take all of our time. Okay, so basically what you need to see in a demand zone is this manipulation to complete, this accumulation to be completed, and after all this is done, our markup begins. Okay, I do use Wyckoff and I have a different way of confirming my entries, which I'm not going to share here. So this markup is where we want to be involved. The same thing applies. The same thing goes for distribution. Price comes up like this. Maybe this is the preliminary, same PS. This is the preliminary supply in this case. Now we want to go to buying climax, automatic rally, ST, sign of weakness, UT, UTAT, break, and the same thing, just opposite of this. That is this. Buying climax instead of selling climax, because we are in a supply zone, prices reach a preliminary supply and then it's hitting into our buying climax and then that automatic rally again. Then ST, sign of weakness in phase B, same thing that we have seen, STB and all that. So this is called uptrust. Okay, this is UT is called uptrust, UTAT is called uptrust after distribution. So we have uptrust liquidating this trend line or this highs, and the UTAT has to liquidate the uptrust. This is again uptrust after distribution UTAT, and price need to test that UTAT, and we have LPS or sign of weakness. When does sign of strength and sign of weakness happens? Look at this. Sign of strength happens after prices successfully broken out of the trading range, right? So these things are happening in A, B, phase C, D, E, okay? It's all right here. I'm not going to go into that. It's not really that important as well. All you need to do is what price is doing, the manipulation. That's what you have to understand in this. Okay, so I hope you get a little bit of this. If not, you watch the video again and refer this, and hopefully you will get that time. So the same thing. Okay, I'm not going to write down. Okay, this is the PS and buying climax, automatic rally, ST, sign of weakness in phase B, UT, UTAT, break, break, test, test, and this is the markdown beginning. So this is where these areas are where you want to involve yourself. These areas are where you want to involve yourself for that buy. And I talk about the three box method as well. So what is that three box? I'm going to apply in this Wyckoff, okay? So the three box is when you have a price coming up and we have a break of structure like this. What does the three box says? The three box says that the moment, regardless of what happened on here, of course, you need to have the proper understanding of the structure, what the higher time frame is telling. But on the particular time frame that you're engaging, when you have a break of structure like this, the moment it breaks, where the break came from here, and where is the high here. So this is our first box. Three box method, okay? This is our first box. Where is the second box? Second box is your demand zone. Where is your demand zone? That is your second box. And third box is the confirmation. That is the Wyckoff. So whatever accumulation that's happening here, let's just put it a box like this. Whatever happens in here, and you're going to buy here, targeting this high. So this becomes our third box. First box, the impulse. Second box is the demand zone. And your confirmation area, put it a box, that becomes your area to involve. So this, with this alone, let's do a back test of any pair, okay? And then let's see if what we are discussing here does work or not. Okay, so give me a pair that you don't usually trade. Just give me a pair. Let's do a back test of what we spoke. Guys, you can speak, okay? Give me a pair. What?
GBP New Zealand.
ZBP NZD.
Yes.
Okay, ZBP NZD. Perfect. I don't think I have any chart on this because I never trade this. Okay, so let's just go to daily. Let me just do this for you so that we don't know the structure exactly what it is. So it is completely flat out now. So let me just pull this like maybe 3 times. 1, 2, 3. And let's just start the replay from somewhere here. Okay, so let me make this bigger. And we'll move to 4 hour. Okay, so now what do we have in this? We have, regardless of what happened in the past, of course, we should consider that, okay, so let's check just for once what happened here. This is what happened. We have a huge impulse, price failed and broke below, hence turning bearish. So where are we expecting price to come? Either this demand zone right here or this demand zone right here. And from that's where this is reversing. Again, guys, this is the three box. Okay, where do you see the three box right here? Price broke structure. Where is that structure? Price broke the structure right here. We have a break structure below. So where is our first box? This becomes our first box. And where is your second box? Your second box can be multiple areas where price left the supply zone. Maybe this is the zone, maybe this is the zone. And I do not choose anything here because we have again break of structure from here. That's why I chose this too. I did not choose any of this. So this, if you do not understand, please go through the supply and demand zones video on my channel, YouTube channel. There you will find. So price is already fulfilling our first box, our second box we have set up. So when you have two zones like this, now if you start selling from here, your stop loss needs to be here. That's why you need to confirm your entry. If you had your Wyckoff right here, supply zone, then you would have already entered here and got a huge profit targeting where? This low. This is where it is going to target as per the setup, as per our three box. This high right here, this low right here, this is what it wants to target. Let's see if that fulfills or not. So let me move this back to okay, daily is fine. So I'm not gonna go into the confirmation part because when you're involving in a daily chart, you need to lower down your time frame by 30. So I'm going to speak about it. You need to use the rule of 30. So what is the rule of 30? Rule of 30 says that whatever time frame you're on divided by 30, and that's whatever you get, that's the time frame you should use to confirm your entry. So for example, for a daily chart, on a daily chart, how many hours is there? 24 hours. So let's round it up as 30 hours. So divided by 30, 1 hour. You need to go to 1 hour on your time frame and then look for that distribution, for the Wyckoff distribution, the same thing that I just drew. That is, price need to come up here and give you kind of this thing. And you want to involve here and involve here, targeting this load right here. So this is what you want to see on your chart. So now we pick a random pair, which I never traded in my life, from your suggestion, and we mark out our first box, and our second box has completely fulfilled. So now let's go to our next setup. Just give me a moment, okay, guys? I got a call. Hello? Hello? Okay, so let's do some testing. Price, what is the expectation now? Price is gonna target here. If this was the sale from here, we're just gonna assume, okay, we're just gonna assume this, and we're gonna target this. This is our first setup. Now again, what do you see? You have a break of structure right here, right here, right here. Where are this coming from? So where is your first box? Now this become your first box as our three box method. This becomes your first box. So let's give this a color. This is your first box now. Now where is your supply zone? Your supply zone can be coming from either here or maybe even here. So does this mean that when price is reaching this zone, you are going to start selling? No. This is a daily chart. Go to 1 hour chart, look for that distribution, and then when you find your confirmation, target it lower. Where is going to be your first target? This is where you're going to take your first partial. Now this become your higher time frame. What? This was the daily target. So this becomes your higher time frame target. And hence the idea of taking partials comes into play. This is where you're going to take your first partial. So I'm not going to go into our chart because this is a far way back where this is 2018. So the chart might not have enough data on a smaller time frame. So let's just play out. Give me a moment, guys. Hello? Okay, so let's see if this fulfills or not. All right. So now, had we involved here without any confirmation, then if our stop loss was here, then we would have been stop out. So now our expectation is what? Price still reaching this and even this. So now this, if you do not get confirmation right here, you do not need to involve. So the same thing, daily chart, same thing. When you're doing, let's say that this is the 15-minute chart. Now you can do and mark out these things on a 1-minute chart, and you can look for your confirmation on that 1-minute chart. So that's how you start to uh, involve yourself on a smaller time frame. So price already reaching here, right? And now you did mark out your zones right here. But what you have to understand is, where is the whole supply zone? Where is this move coming from? From this low. So you need to understand that this whole is an whole supply zone, right? This whole area is a whole supply zone. So that's why sometimes price does not reach our area when we over refine those zones. Okay. And do not be surprised that price did not mitigate, price did not fill the imbalances. No, this it has done. If prices fall from here, you need to know that price has already done what it needs to be done. The mitigation, the imbalance already it's being done. All right, so here, what do you know right here? This already selling from here and price is coming back right here. Again, the same point that I talk about, price is coming back right here into this. It hit our what? Break even. Now, I told you our stop loss could be here. It should not be above this. Why? Because price coming back to you shows that maybe, perhaps they are not ready to bring this price lower. That is why extending your stop loss here, here, or here, here, it's going to cost you. So your stop loss is there for a reason. It invalidates your whole setup. If that stop loss has been taken out, it invalidates your whole setup. And we got a very interesting here as well. Now, how do we know whether this is a break of structure right here or this is just a wick of this liquidation? If price falls off like this, are we going to call this break of structure or this is a liquidation? One of you asked me already this on the chat. So when price coming here like this, we want to see a breakout with a momentum like this. Only then we will consider this as a breakout of this break of structure of this zone. Otherwise, this happens a lot of times and that becomes just uh, an absorption. Okay, an absorption. I'm going to show you that. Use a daily chart. Okay, I'm going to show you where it happens. Okay, right here. Price is in bullish momentum break above. Now price break above this. Where is our first box now? This becomes our first box. Price reversing. Where is our second box? This is our second box. And we were expecting a buy from here, targeting this high. It did fulfill. However, see, it broke through below this. And how did it break? Just weak, not even a body close. So this is what we term as absorption. Okay, absorption. Do not confuse this with a break of structure. No, absorption. Okay. If we want to see a break of structure like this, then price would have come like this. So if you got a confirmation here to sell, involved, and that does not guarantee you that it's going to go down. It does not guarantee you. That's why you have a stop loss. And that's why you need to take partials. Now, what do we have? We have huge wick still. We have a huge wick taking out this with a momentum. So let's go and see where it came. Do you see now? We had two zones that we were interested. First zone right here, first supply zone, second supply zone. This is our first box. This is our second box. In second box, we have two different areas. So that's where price is reaching. Now, until price break above this, we're not going to assume bullishness on this. We're still bearish. We can still look to, let's say that you had a sale from here. Let's say that you got a confirmation and then you're going to go in like this. Still, you're going to target as your higher time frame again here until price break this high. Now, at this point, you were selling from here already, and the moment price breaks certain important lows like this, like this, like this, those are your areas for taking partials. Again, here, these are areas. If you enter here for 5 lots, you will be taking out maybe 3 lots here. Remaining 1 lot you take out here, 0.50 you take out here. Like that, you keep on taking off your positions, taking partials of whatever remaining. Okay, let's see. So this is a daily chart, so that's why it's taking, see how much time it is taking. And if you're involving yourself on a 15 seconds right here, just imagine just a couple of minutes or hours like that. Again, let's no, nothing we can involve in this. Okay, so now what do we have? Price turning bullish like this. And can we assume bullish? This is where I want to talk about uh, people who do not have an deep understanding on SMC. They think because we have a good break of structure here, they start buying. Of course, see, we have 3 box method right here. First box, where is our second box? Maybe from here and maybe from here. All of this failed. Okay, so this is why you need to understand structure. What were we doing on a higher time frame? We were targeting this low, and just because price has an intermediary break of structure right like this is a manipulation, even manipulating the smart money traders. So why? Because they know many people trade smart money, many people follow institution. They know that as well. That's why. That's what they're doing right here. That's why I did not see the buy to target this. Rather, focus on sales like we did on EU for the last 2 weeks. Oops, that's so far that's happened right here. Okay, I think we're gonna have to do on a 1 hour chart. Otherwise, we won't get any proper setups. Give me another pair. Guys, we'll do one more back test and then we'll go for the next tomorrow's setups. So give me a pair.
Euro CHF.
What?
Euro CHF.
This.
Yes, yes, yes.
Okay, so again, I do not trade this, so I do not have any data on this. Let's do it. All flat. We'll start from somewhere here. And this time, let's go into a smaller time frame so that we can have a basic idea what's happening. Okay, this was back in 2015. What do we have? Wow, what is this? We have a break of structure right here. So maybe this is somewhere we can look for a sale if price do come up here. And sometimes we fail to understand that it's not always the case. Price is already bearish and it can just keep dropping. Or maybe it gives a reverse from here, which we don't know. And what happens in this case? We need to go into a higher time frame and see what's happening. Okay, so this is the monthly chart and price has been bearish. We have a break of structure. So yeah, we're going to look for sales in this. We're going to target to break this lower. Let's go to please work 1 hour. Data point unavailable. Shit. Okay, where was it? We'll do again. Okay, somewhere here, right? We play here. And we'll try on a 4-hour chart. 1 hour, not available. Okay, so let's try this. Now, we have seen this many times on, especially on a high impact news. We have a move like this and price coming this, and we don't know where to involve. So let's wait. Let's see what it does. If this breaks below, then we're gonna look for sale. And that is what we're expecting, only price to break this. Okay, let's try to involve here. May or may not work because price can still come up here, but let's see. We have a break of structure turning from here. Okay, we have a break of structure here. Now price heavily moving down, and see this manipulation. It move up, making as if it's an accumulation. Instead, it fall down. In the process, what it was doing, it was liquidating this trend line. This move was made to liquidate this trend line, sale, 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 stop loss above here, above here, above here, above here. Those trailing, their stop loss will be here, here, and somewhere here above this. Now price, people sold here heavily. It came up to take out all of those liquidities before the final fall off. Where is this fall break here? Where is this sale coming from? Here. This is the supply zone that, and if price comes here, we are valid to look for a sale. And now we have a break of structure again here of this. We have broke. Where is that coming from? Right from here. So again, if price is coming here, we are valid to look for sale. Now, as per the structure, you have engaged yourself to find supply zone because we are in a we're in a downtrend, and now we're looking to take this further into the lows here. So let's see if price does give. And this we're going to look until if price breaks below this, then we're not going to concern ourselves with this anymore. We're going to look for other supply zones. For now, we do not have. This is the only two zones that we can involve. And I know this is a long time to wait because of 4 hour, but when you're doing this on a 1 minute, on a 15 seconds, then this becomes a very tradable. With just a little bit of time waiting around, you can just easily involve yourself. Let's see. So now in this situation, price, you sold here, price came back to test this zone right here. Price came back to test this right here and broke below this. Again, price came back to test this. See how it does. It keep on testing the supply zones. And has it begun markdown? No, it has not begun the markdown yet. We do not want to be in a situation like this, okay? This is very bad for us. See, what did we talk about? About that price coming to mitigate again and again in your zone, right? Price broke down, still came up and failed to break, and it's coming up. How many times it is coming up again and again to mitigate your orders, your left order? So this is when I'm a little bit concerned about my buys on my sale, because that markdown that we want to see is not happening. So that's when you need to be very aggressive with your BE and taking partials, because it shows that the institutions are not yet ready to pull this down. Okay, so I hope that gives you a little bit of insight. Well, let's see. So this is the zone that we're looking for a sale, and that did not happen. So these zones are no more important to us. So now you know why you need to confirm your every entry. Had you found yourself a sell confirmation here. Good. You have a sell running. And why you need to take partials and aggressive BE that I have been talking about. Why you need to BE, why you need to take partials. Where you could have taken this low, you could have taken your partials. This low you could have taken, this low you could have taken. That way, if you when you manage your trade like that, then you become profitable. Maybe the profit is less, but you do not end up losing. Otherwise, even if you get a confirmation, still you could be wrong. So, are you surprised that price came up here? No, you should not be. Why? Because there is a zone again above here that we expect price to come to. So now what happened? Our bias changes now. How does it changes? Where is the last break of structure we had? Break of structure right here. Where is this coming from? Maybe it came from, this is the last zone, let's say, and maybe this is where it came from, or even this. So now, when you have multiple zones that you are interested, how are you going to buy? If you had no way to confirm your entry and you're buying here, where is your going to be stop loss? That's why you need to confirm. And let's say you have your Wyckoff accumulation and you bought, let's say price came like this and you bought here, your stop loss is going to be just below this. And if price is coming back like this to hit your stop loss, it shows you that it's not ready to move up this. Maybe it wants to target the lower zone, just like that. So this accumulation moving up by just one impulse, what do you see now? Distribution. This become your UT, this become your UTAD. Price could easily do this. Understand? This is why break even and stop losses are very important. Your stop losses should make sense. It should be in such a way that it invalidates your whole setup. Okay, so let's see. All right. So what do you see here? This was the first zone we were interested to buy. Boom. It gave you a huge buy, right? And why we needed to take partials? Your first partial was where? This high was your first partial. You should have taken your 50%, 90% your partial here, and then keep trailing and trailing all the way here. Where? All the way up to here. But price is already reversing. So if you do not take partials, if you do not BE, this huge move, it's going to be for nothing. So now price broke down. This is no more important to us. When price come to this zone, we're again going to look for a buy confirmation. If we get, we involve. If we don't, we let it go. And if price breaks lower and break this low, then we're going to change our bias for sales again. If you see, where did this reverse from? Where did it reverse from? You had another demand zone. So this is why every demand zones in this move up becomes an important zones for you. This. But the thing is, we can have multiple demand zones and multiple supply zones. And only way that you can be sure that that is the one is to confirm your entry. No other way. This is why confirmation is very important. Price move up, break higher. Now, what are we expecting? Expectation is that price already in a bullish nature and it will go until here. That's the expectation until we see otherwise in this. Let's see if we can involve ourselves in this. So what do you see here? You have a break of structure right here. Again, you have a break of structure right here. So in such a situation, you are valid to look for sale. And this is going to be very tricky, guys, because if you're trading on a 4 hour and if you keep on waiting this, you're not going to find setup. So you need to start thinking fractalized time frame. Then what if this was a 15-minute chart? Obviously you were going to look for sales targeting this low, right? And again, if you do not get confirmation here, why would you involve? And even if you got a confirmation here, you should be very aggressive with your BE, because why? With your partials, why? Because price may easily come up here. Even though we have a break of structure like this is when you need to combine your Dow Jones theory with your Elliott wave. Dow Jones theory that says that price kept making higher high and higher low. However, Elliott wave theory says that price 1, 2, 3, 4, 5, A, B, C. Break of structure, break of structure. Again, this pattern continues. 1, 2, 3, 4, 5. Break of structure, break of structure. So this is what Elliott wave theory. And this movement can be a smaller time frame movement of a higher time frame that just did this, that just did a Dow Jones theory. Guys, I don't know if you're following me. Maybe this is a little bit confusing because at all in one class can be confusing, I understand. So you need to go through this again, and maybe you can ask questions if you are confused with this. Okay, maybe this break of structures, which the Elliott wave theory is, it is just a small time frame happening of a this. Let's say this is a 1 hour chart, and let's say this is red is a daily chart. Daily chart is doing what? Dow Jones, and smaller chart is doing what? Elliott wave theory. So this becomes a little bit complicated, but with practice and with experience, I'm telling you, you're gonna nail the market. Just have patience. So this is where we're gonna look for sale. When price came up, break of structure, we were looking for sale. Yes, we had a little bit of sale. Now price came back up. And are we still valid to look for a sale here? This is where we could have looked for a sale right here. Why? Break of structure coming from here. Otherwise, this could easily break and shoot up higher. So now it seems like a little bit confusing that price is not respecting and all that. That is why confirmation, guys. Okay, finally it came to this zone and it's now falling, and we have a break of structure right here. So how are we going to involve again? This is the area where we want to sell until this low is broken. This is how you can follow from price to price, from zone to zone, and this becomes not important to you. This becomes no more important to you. If this breaks, probably this is going higher. Yeah, so exactly it came here, and now where is your target? All the way below is your target, but your first partial, that means where you're going to book 90% of your booking is this low, right? This low. So like that, you start to involve yourself. Again, follow the price, where this is coming from. Where is this break coming from? Where is the next supply zone? So let's see where it is. One here, and even right here. If price comes up here, we're going to look for sale, or even here, sale. Nope, broke through completely. We had nothing. So no more important. This zones does not interest us anymore. And if price comes back to this area, we can look for a buy. Why? Our three box. Forget about all that happened here. Okay, let's just try to involve. Let's try to make things easy, because now You know about white call. You know about confirmation. Forget about everything, all the structures. Now we have a breakout structure right here. This is our first box. Second box is here. And this is a hidden demand zone, okay? I already talked about this. So, yeah, this is a hidden demand zone right here. That's why price is reversing from here. And if you don't understand this, when we go to maybe a 15-minute chart, you're going to see a very nice demand zone right here. So I'm not going to go into that. Let's see if price either come here or here. So in such a situation, what does this entail now? Maybe this is a low, a liquidity that price wants to target here and move higher. One bias, or maybe price already gave a break of here and maybe ready to move higher. Whichever it is, now if you do not involve here, now your only option is to wait for price to come here. Okay, so now price came back, and let's say you had a confirmation, good. Then you had some good buy. And if you took partials, good. And in this situation, where it's going to be your partial may be in this supply zone, okay, or this low. Remember, this whole zone I talked about earlier, from the lowest point to the highest is your whole supply zone. So this is why this low was very important. Price came and took uh, uh, act as a resistance kind of in this, act as a supply zone instead of coming to the whole zone and came back. So now, even if you bought here with a confirmation, if you did not enter with a break even, or if you did not book partial, this is a loss for you. Otherwise, this could have been a trade that gives you a 50 RR, a 20 RR, 30 RR as per how you involve yourself. Completely broke through. Now this is no more important. Let's follow price. This is no more important. Where is this? Forget about this move, okay? Where is this break of structure coming from? All of this area. And where are we going to target next? If this does sell, we're going to target this low. Nope, did not happen. So if you got a sale here and you were targeting this, and if you had no break even, then this is not a good trade for you, right? So this is no more important to us. Let's close this. And this could have been a break-even trade. Now we have a break of structure here, breaking here, all of this. Yes, price is coming from here. However, again, as per our three-box method, we have a break of structure here. So again, this is a valid setup to enter for a buy from here, somewhere here, targeting this high. So like that, everywhere you can involve yourself. Once you know how to confirm your entry, and once how you know to manage yourself with the break even and partials, then things become very easy for you. And imagine doing this on a 1 minute chart, on a 15-second chart. You're gonna get trade every minute, every half an hour, and every hour. So you can do this way. Yeah, so price came, give you the confirmation, got back up, give you your target, and it hit the target. So if you had your way of confirmation here, then see how easily we can get trades just like this. All right, guys, I think we're done for this testing. On more session to come, we will try to do more back tests, because back testing is what helped me a lot in understanding how the price moves. It's not always that just because I had a bias and I have a perfect setup that I will get profit in that. And that's when I started to understand the importance of break even and stop losses. So yeah, let's look at few pairs for tomorrow, maybe three pairs, and we'll close for the day. So what pairs shall we look at?
EU.
EU, nice. So already I have a, okay, I'm going to remove this now. So I'm still very bearish on EU. Why? Because even though price is already hitting monthly chart, demand zone, still I'm expecting price to come here, even this lower and targeting this low. So what I'm going to do is I'm very reluctant to buy on EU right now, but this is a 1 hour chart. What do you see? Maybe Wyckoff is happening. Maybe this is the selling climax, or maybe this is the PS, whatever it is. And perhaps this is the spring. And if I see this move with an impulse breaking even this high like this, then on the retrace, I'm gonna go for a swing buy. This is why I say, or this is a monthly chart, it's gonna take days or even weeks to finally reverse. So until the institutions are done with their transfer of powers from the weak hands to the strong hands, we are not gonna just see a reversal. So for now, let's see if we can have a little bit of buy opportunity here, at least still here, or you can target this here. Why? Because of this trend line. I'm not gonna buy because of a trend line break right here, but I believe that this is just a liquidation. That means those who sold here, those who sold here and sold here, now they are coming up to grab all this liquidity. So maybe even this they might come to grab and target even higher all the way up. But I think at least this is where I'm targeting. So I had a buy. Unfortunately, I do not hold weekend, so I closed. I had a buy from here. So I already closed this, and I'll see for a buy opportunity if I get one again. So now see the manipulation right here. A trend line, a breakout, and a perfect retest. And this is when we think that okay, maybe a trend line uh, break and retest it does work. We may think that, but if that gives you profit, good, but at least try to understand what it is doing, what the price is, why it is happening. It is just a manipulation of this trend line, taking out liquidities. So what are we going to expect? We are going to expect price to come up as per our 3 box. Where is our first break of structure? We have a break of structure here. This is our first box. This is our first box. This is our second box, and we're going to look for a Wyckoff distribution here to target all the way here. We'll book parcels here, and target all the way lower. And one thing that supports me right now is this retail sentiment, right? So let's go to A1 trading. You can use any other. I just happen to use this retail sentiment. Euro USD. How many people are on buy right now? 75% are long on Euro USD. Euro USD right now, 75%. All of Euro USD, 75% people are long right now. And institution is just doing that. They're just making them believe that indeed this is the reverse. And we all know they're not gonna, because once they have enough money to manipulate, to take out, then they're gonna drop this heavily, just like they did here. Just like we had a break of structure here. Price broke this structure here, and people were buying. Even with this 3 box method, first box, break of structure, second box, somewhere here, people were buying heavily, even in my group and the others group that I saw, that I'm in. They were buying, and I told you to sell, keep selling, selling, selling. This is a new trading view premium I took. That's why I do not have the chart. Otherwise, I have been selling this from here. Why? Again, that Elliott wave theory. 1, 2, that 3, 4, 5, A, and then B, C. This is somewhat I drew on the chart before this move was happened when price was here. This is what I drew and sent out on the group, if you remember. So as per the Elliott wave theory, I was expecting price to go lower, and that happened. And again, Same thing you are seeing here. That's why I'm explaining this break of structure, and we were expecting bullish, and then see. So let the Wyckoff accumulation complete. If the Wyckoff accumulation complete in this, I will go for a buy. Until and unless that happens, I remain bearish on this. So let price come to this. If you're on a buy, take partials here and here, this high, this. So these are areas that we will be taking partials if you're on a buy. Otherwise, I'm gonna look for a buy if I do get something like this by tomorrow, like this, breaking this high, price come like higher like this, and on the retrace, I'm gonna look for a buy at least to this high, targeting this high and even targeting this. Otherwise, I will be looking for a sale from here, somewhere here. I will be looking for a buy somewhere here. I'm not gonna buy from here or here, thinking that price still has ways to go. If you go this to 4 hour, many of the people, what they are thinking right now, huge imbalance, huge. They need to mitigate this order block. So they are buying into this right now. And they thinking that they will sell from here. Did that happen here? No. Price came from here. The sale came down from here. It did not reach here. Same thing could happen. Price does not necessarily need to go here. It could easily reverse right from here. And I think that this is the area price will reverse. So let's look out for a buy. And if it does comes up, and we'll look to sell this. I will keep posting this on our group. So let's look for another pair. Guys, give me another pair.
GU.
You. Okay. I'm even more bearish on GU right now. So, okay, this one, let's just go a little bit deeper, okay? Just let's do a top-down analysis on this. Why we were very bearish on this. We have a break of structure here, this, and instead of price reversing from this as per our 3 box, reversing from here, price broke through, and now it is reversing. And if this would have reversed all the way, we would have gone bullish. But that did not happen. Price already broke through this right here, hence turning bearish. Again, price came up, failed to break higher, and price heavily sold from this supply zone right here, and it broke through again here, like this. We have a break. Now, what is the expectation now? As per those zones, price making lower high, lower low, lower high, lower low. That's expectation. That's expectation. So the expectation is that price is going to target this low. And that's why it lines up with my EU bearishness as well. On EU, you will find a demand zone here, but GU has no demand zone right now. So we are going to target this low ultimately. But for now, what do we have? Same thing on a smaller time frame. Forget about what you saw on a higher time frame. Okay, forget about this imbalance, price coming back, this imbalance. Forget about this. Already price broke through. Already made break of structure here. Already made a break of structure here. So where is the latest supply zone? Maybe this is one area. And where is another one? Maybe this is one area which I think already marked. So let's see on a 4-hour time frame. Yep. So good. This is good enough. This is how we can refine to the how do we take the order block? Before the impulse move, we take the last candle, the last up candle, usually up candle. Okay, up candle in the sense this is a moving down, so we take the bullish candle. So bullish candle. And you can refine this. You do not need to include this week, okay? This is another day we'll talk about this, not today, how to refine order blocks in a correct manner, because I see that lots of people are teaching the wrong way. So this whole zone is the supply zone. However, I have already refined this to this, only this area. Okay, how do I take this? The last candle. Okay, the last candle. However, in this situation, it's the opposite of this. Now you need to include this wick. You have to take the higher wick in this scenario. So this is where we're going to look for a sale. Why? Because this break of structure is coming from this. So this is the perfect area for a sale. Now, if price gives us a good way to buy ourselves into this, okay, let's go to a 1 hour time frame and let's see. If price give us a good buy setup, I will buy into where? Into this. And I'll be very careful because I'm very on this. I want to sell this pair. And even if I don't buy, if price comes up here and give me the distribution, I'm going to sell this first target, the lows that they will be making. And on this lows and this lows, I will keep booking and eventually targeting this and all the way to our monthly target right here. So I'm very on you. This is not even okay. For argument's sake, let's just include this one as well. Why? Because this could be a liquidity that it is happening. We could see price come here and then reversing and reversing what? Why? Because sell here, people selling trend line here again. Again, people will be selling here. So this time they may do this, taking all this liquidities, all this the sales, right? And those people who trade breakout, they may have buy stop above this. So hence the buy stop will be activated. And finally, when they think that price is reversing and they want to buy this, it may go a little bit, price does this. Hence the accumulation we were hoping for price to go up, with just one impulse, it becomes distribution. Right. So reaccumulation and redistribution is a little bit confusing, guys. So just go through this again when this is done, because this is going to help you a lot in understanding all of this. Otherwise, what I'm saying, all of this will not make sense at all. So yeah, this is why this is one area I want to sell from, and I will be targeting this low, not all the way. Why? I'll be booking 90% of my positions here. Why? Because I'm still expecting this liquidity to be taken out before it takes lower. And GU 72% are long right now. Okay, guys, I think let's stop here for the day because I got some work now. I need to move out. And we will catch up again next weekend maybe if we have time, and we'll try to learn about more of the structures and what we learned today. We will try to go deeper on this. Okay, anyway, so thank you for joining in. I hope you guys have a nice weekend. We'll kill the market tomorrow. Signing off. Bye bye.